think you're bringing 130 grand to close it instead of 142. That's game changer.
I've literally had clients switch to you because they got into the loan. No, I'm not paying 10 grand for no reason.
We have to now determine what that payment is. 40 hours before closing, don't do it.
We're talking about a subject today that maybe isn't as exciting. We're talking about numbers, we're talking about money, we're talking about loans, but we're also making sure that you guys don't make a bunch of these mistakes that our clients have made in the past. I met Jake Dewe, he's over at Rocket Mortgage. I met him years ago because we were doing a deal with a client here in Durango. They were needing to buy and they were going against multiple cash offers and trying to get this offer won. And I was working with him. He called me at 9 o'clock at night when I was out of town. He was trying to help me put together this deal, and we beat out these other offers mainly because of Jake here. So we're going to dive into some things that you can look out for and some ways that you can make sure you get your offer secured when you're going against other offers, as we are today in Durango. Jake, how's it going, man?
I'm good. How are you?
Good.
We hanging out?
Yeah, it's awesome.
Yeah.
So let's just dive into the first mistake that people make, and it's really not getting pre-approved before they start looking at homes, right?
Yeah. Sure. There's a lot of people that are pre-approved and they know they can get mortgage financing, right? And then there's people that don't know. The ones that know they can get it, they tend to wait till the last minute a lot of times. And the problem there is you get under contract and now you've got 25 days or whatever, right? There's contingencies on appraisals and you can't order appraisals until you do certain other pieces in the process. But not, you're worried about home inspections, get appraisals ordered, and you don't have time to get your tax returns and figure out your company's payroll website, right? So that it almost is just such a nuance for the client, not even for us. We don't mind doing it, right? But just be ahead of the game. Like you're gonna thank us later.
Right, and let's dive into some of those examples we've seen where it's gone awry. In my experience, and I'll let you dive in.
Sure.
In my experience, I've seen clients think that they're getting a $4,000 payment when it's really $6,000 or $5,500. They fall in love with the home, they fly out here, and they fly home to Virginia, for example, and now they can't buy the home. What's your experience with that?
Yeah, and well, we worked with that client coming from DC, right? One of the problems there is people get online, right? And you get online, it says, if I'm buying a house for $800,000 and putting 20% down, my payment's gonna be this. It's not always the case. Online doesn't know that homeowners insurance can be expensive in Durango, right? Taxes they're not bad, but they're worse than some places, right? HOA. So you think you're going to walk away with a $3,500 payment, and all of a sudden, all in, you're $4,400. Well, is that house still affordable? Is it still the dream house?
And by the way, guys, if you're even thinking about moving to Durango, Southwest Colorado, we both got your back when it comes to moving here. I'm a licensed realtor. My name's John Burden with HomeSmart, and we'd love to help you with all of your real estate needs. Jake Dewe over at Rocket Mortgage. Would love for you to reach out to him, even if you're not thinking about moving out this direction. Right. Well, let's talk HOAs. A lot of people don't think HOAs are factored into their numbers when you're running them. What's the truth on that?
Look, so we give people the principal, interest, taxes, and insurance payment. The vast majority of people have escrow, but it's still something you have to consider, right? What do the HOAs typically run?
You can have some up to $2,600 a year.
Yeah.
$200 a month.
So if you're right there on that borderline, A, do you want to make that payment? B, do you still qualify? Right. So going back to your statement about getting pre-approved earlier on, do you qualify for a payment? If you only qualify for $4,100 a month, and this is now $4,250, it happens. We see it all the time, right? And
so it does affect qualifying.
Absolutely, it's part of the debt ratio for sure.
Okay. Thank you.
And it's not like homeowners insurance where you can call and try to get a cheaper quote, right? Or you can buy the interest rate. It's a set number, right? I can't change the HOA.
And in my experience, it goes up. I've lived in Durango over 5 years. It's gone up $300, $400.
My goodness, right? Everywhere. Everything goes everywhere. Yeah. HOA is definitely.
It's not going down. Let's dive into that pre-qual piece of family insurance.
Yeah.
So you're seeing numbers, we're both seeing numbers at 5,000 plus.
Oh my goodness. Yeah. 8,000, right? A year. $650 a month. I mean, there's some fire out here, right? Colorado in general, but Durango specifically.
There's a lot of forest.
And it's beautiful to look at, but there's still stuff that comes with that. I would say all the deals that you and I work on together, you do a really good job of kind of prepping people up front for that, especially people coming in from out of state, because they're coming from Tennessee and it's $1,400 a year, right? And they just can't fathom 8,000. So they're always great when they get to me, but when they come from you, John, but when they do come from other places, they're like, what do you mean my insurance is $650 a month? Right. So that goes back to A, do I qualify? And B, do I want that payment?
Right. It's that big thing of, again, guys, just talking to you guys watching, if you're flying out here, you're looking for 2 days, 1 day, you go home, you only look at 3, 4 homes, and then you realize you don't qualify for those homes, or you're just not comfortable with those payments.
Right.
And that's what I've
Or
seen.
Again, maybe I'm not quite pre-approved.
That's
right. For as much as somebody.
It's one of the two, yeah.
There's a lot of lenders out there, call centers, and they're like, you can buy for $400,000, but they don't know what your insurance is going to be out here if they're in Atlanta. Or
they're just trying to get your business.
Yeah, absolutely. Let's see how many we can throw against the wall and see what sticks. I mean, it's an unfortunate mindset, but a lot of companies do take that mindset. I shouldn't even say companies, loan officers as much as anything. Right?
Yeah, for sure. Okay, so that just leads us honestly right into shopping only based on rate. That's a perfect segue of that.
Yeah.
Tell us what you've seen. You've been to some other companies. Tell us what you've seen with some of the unethical practices that they'll see from other lenders out there potentially.
You know, it's really unfortunate. We see it all the time. I'm working on a file right now. It's a refinance down in Florida. Super grateful to have known this guy for years because he was able to get online and find an eighth or find a quarter better on rate. And it's a VA loan, so he's not a low fives anyway. But you get to the closing table, man, and stuff just moves, right? It shouldn't be that way. It's not supposed to be that way when they lock your rate and everything. But if they're floating your rate, right?
Well, and what I've seen, correct me if I'm wrong, what I've seen is they get to the closing table and boom, there's a 2%, 2 points fee that they never saw, never was disclosed, or maybe it was buried in fine print.
Yeah, I mean, any sort of origination like that outside of points would have been there typically from a compliance standpoint. But that doesn't mean it wasn't discussed and it wasn't hard to see, right? You need a magnifying glass. And realistically, there's nothing wrong with paying points or paying a high origination fee. But you got to know as a client up front, right? I don't necessarily want to do business that way, but if somebody says, hey, I want the lowest rate, I want to pay for it, sure, by all means, but you can't find out at the closing table. You think you're bringing 130 grand to close it instead it's 142. That's game changer.
Well, I've literally had clients switch to you because they got into the loan and then they asked, what are all my fees? And they said, no, I'm not paying 10 grand for no reason. Yeah. And it wasn't even buying on the rate. So good for you to expound on that.
Yeah, it's unfortunate. I think there's good and bad everywhere, right? Whether it's lending, real estate, coffee shops.
And I think it's just generally their takeaway for this point is knowing that if you get that low rate, make sure you know what else is going on.
Yeah.
Also,
low rates are good.
They're
right.
Good. But what else is there? And are you getting a phone pickup or an email back or text back at 9 o'clock at night?
Yeah. Like, sure. To explain those numbers.
Need something.
Right.
Like,
the day before closing. Like,
yeah.
That's one thing. I mean, I've been lending for 20 years. As much as that dates me, I hate it. But it's been good to me. That's one thing I learned early on is it's an industry, right? I'm particularly, you've got to be there. You've got to answer your phone. People say, you're really good at your job. I'm like, I'm not. I just answer my phone and reply to email, which is kind of.
I'll say you're really good at your job.
It means you got poor taste. No, I appreciate the compliment. You want to find a contact that you're comfortable with. Going back to the shopping, talk to the true people you're going to talk to up front. Make the decision and stick with them. Look, rates are in the sixes. Like we hate it, right? Yeah. Rates were great when they were 2.5. I don't know if they'll ever be there again in our lifetime. But I guess where I'm going with that is you're probably going to refi. So you're not paying an extra $60 a month or $100 a month for 30 years. You're paying it for 6 months, 18 months, 36 months. Worry about getting the home, right? Getting the home, doing it something you know is going to close. They're reputable. They know the area. Then you can worry about, didn't cost you tons of money. It cost you 8 months of payments or however long. We can't guarantee rates are going to go down, but it seems to be the thought right now.
Right. With that, are there any, I'm going to just leave it open-ended, are there any things that you guys offer at Rocket that are a little different?
Sure. We've
set you apart.
Yeah, man, Rocket's been great. Rocket has, I don't know if you saw their Super Bowl commercial, but it was pretty cool. If you haven't seen it, see it. They're big on like, let's help everybody. Everybody deserves a home, right? So we've got some programs for first-time home buyers. There's some programs for people buying primary residences. There's a 1.0 buy down right now that's awesome, man. So you come to me, absolutely. So you come to me, you're a veteran or a conventional, whatever. Your rate's $599 for 30 years. That's where you qualify based on down payment, loan amount, credit score, all those things, right? All these factors that affect rate. The first year, Rocket's going to pay for you to have an effective 4.99 rate, right? So when I talk to a client, this is my approach. When I talk about that, look, can't promise rates are going to go down, but this does one of two things for you. Either A, hopefully we can refinance and the rates are indefinitely 4.99 by that point, right? Can't guarantee it. That'd be great. But even if they're 5.25, the other piece of that is it at least gives you 12 months, especially while you're moving or moving across country, to kind of prepare for that bigger payment, right? Like maybe you've got 18 months left on a car, and I'm going to pay this car off in those 12 months, so it's not affecting my livelihood.
That makes sense. Yeah, you still want to expect that it might go up, but you have that leeway, and it's a lot less money you're paying for a month or a year.
It's a great product. It really is. Not necessarily available on every single loan out there, just because it's a jumbo product for a $2 million loan. But it's a wonderful product. FHA, VA, conventional.
Now, while we're there, bring up the product that you guys have regarding guaranteeing that you're going to close.
So anybody can write a pre-approval letter, right?
That's right.
You call me, hey Jake, this is my social security number and my work history, and you give me your docs. Or you don't give me your docs. That's the problem, is people don't get it. So you just send this letter out that says, this person's pre-approved to buy a home, right? And you as an agent, when you get that, like, do you know?
We don't. Now, I will say, I personally, and our team personally, will call the lender, verify, talk to them, what did you do? But we know that you're actually double checking all that because it's your reputation that's on the line.
Right, and what we do is we can send a pre-approval letter to you. It'll state right on there, like, we verified credit, we do not necessarily have income or assets yet. Pre-approval before, we talked about that. Get me your docs up front. You're going to Durango in early October. Let's talk in early September, right? Let's get your docs. We'll send it through underwriting. It's gonna take 24 hours.
Quick.
And I'll be able to print you a pre-approval letter that says income, assets, credit have all been verified, the file's been underwritten, and we'll pay you $1,000 if it doesn't close. So
It's phenomenal.
that's helped clients of ours win deals.
Right. And I want to dive into that. I'm just going to look back at you guys and just say that it is such a huge thing when I can go to the listing agent. If you're working with me as a buyer, I can go to the listing agent and say, look, I've got a personal relationship with this lender. I've worked with him for years. This is who's working with them. He's actually verified all this. I've spoken with him, and he's guaranteeing he's going to pay them $1,000 if he doesn't close on time. So for you guys watching, that makes a difference to win out an offer against if you're in a bidding war.
I've got a client right now in Grand Junction with 2 offers, right? And the loan amount's just over $1 million. That was the difference maker. I mean,
right. Well, and I think what else has been amazing is you are always great at calling up the listing agent, talking to them through it, and just explaining what's going on.
Yeah, I just want you to have my cell phone number if you ever have a question. That's right?
Yeah.
Yes, they've been under it. Everything on that letter I sent you is accurate. Been under it, and I have all their docs. I don't have any concerns. Obviously, I can't control appraisal, right? But other than that, it helps so much. And the multiple offers, which we get a lot of multiple offers here. You and I, we do both of our clients.
And we're still getting them today. For people watching, this is not a really soft market. We're still having multiple offers right now. I've been in bidding wars recently. So with you.
That's a common mistake in Durango, right? People think the market has kind of
regressed
a little bit, and
it has some, but not
like some places.
Not like some places,
right?
Yeah,
and we have houses, and I mean, I live in Arizona. We have houses sitting on the market 240 days, 130 days with no offers, and the price is down 18% from the initial.
Right. And now to clarify, we see those days on market here, but if it's move-in ready, it's a nice home, it's what a lot of my clients are wanting, it does go. Or when we get that one offer, when we put in our offer, then they go and tell everybody else and they get more offers.
Yeah.
So we just got to be strong regardless.
Everything is a tool, and the verified approval letter is just another tool we give you, right? We want you to win the house you want. We want to be there to support you. I haven't run into a selling agent yet. John doesn't love it.
Oh, it's phenomenal.
Right? Yeah, I mean, I talked to...
It sets you apart.
Yeah, I just had a call in California from a client that they were moving from Arizona to California, and the listing agent's like, look, I mean, I've never seen a letter that says we'll pay $1,000 if it doesn't close. I mean, that's how confident
It's a big deal. It's not $100, it's $1,000.
Which means we've done the homework, right?
Yeah, you're not going to just risk that. Yeah,
right.
For sure. All right, the next one on the list is talking about not making big financial moves before closing. Let's dive into some nuance of that. A lot of our clients watching, they know that, but let's dive into like, hey, but there's these other things that we've done or we've seen clients do.
Yeah, I mean, I think the biggest one is, and it's better than it was 15 years ago, right? I mean, because word gets out, but people want to just go finance 22 grand in furniture. I get it, you're excited, right? And that furniture is going to look wonderful in your house. If it kills your deal at closing, because we're gonna see that credit pull's done, and we're gonna dig and figure out what it was. So now what we have to do, you went to ABC Furniture Company, right? And you financed $22,000. We have to now determine what that payment is, just like your HOA we talked about. Right. And that factors into your debt ratios. Right. So 48 hours before closing, don't do it.
Absolutely. Now let's go a little more nuanced and say, let's say these guys got a lot of cash in their bank account. They may be pretty padded with cash. Let's say they go spend 50 grand on furniture, 75 grand on furniture. Can that affect them in any way if cash?
I mean, if it's their cash, and as long as they have enough to close, they should be all right. I would certainly encourage somebody to wait until they see the final dollar figure.
That's my thought.
There's tax credits from title, things like that they may or may not see. Look, man, we're talking about mortgages and thousands of dollars in interest rates, and it can be affected just by the day you close. A Thursday versus a Wednesday can affect your cash to close, right? Your prorating taxes. It's just best practice to wait. Plus, what if something did happen? I've had a case where the seller, 48 hours before closing, backed out. There's legal avenues, and you would probably be able to touch on that.
Sure.
But are you going to pay all that money to an attorney to try to get? Now you've got $20,000 in furniture.
We don't want to bank on us going through court and getting it figured out. Yeah.
Right. I mean, what do you do with that furniture? As a whole, for any, just wait. I get it. Most companies I'll deliver it in 10 days, right?
Mm-hmm. All right, so the next question is, kind of just address for them what the difference, of course you're kind of biased, but we still want to talk about the nuance of not using a lender that has local knowledge of taxes, insurance, HOAs, how those nuances work. But I'm going to jump in and say something first too. In my experience, when I have lenders that aren't paid commission, just being honest, if lenders aren't paid commission, in my experience, they're just getting passed around. The buyer is getting passed around from person to person.
Yeah.
And I think that's something too.
I mean, this goes back to finding somebody, we talked about a little earlier, but you want to work with somebody that knows the market.
Right.
We talked about this with the debt ratios and homeowners insurance being high. Understands the market. Realistically, companies pay differently. right? And some of them have the mindset of, let's see if we can write 25 loans a month and throw as many against the wall and see what can stick. And they get paid a little bit less, and there's some other ones that they want to have 5, 6, 7 loans a month and deliver on service. Our goal to deliver good service is to make sure that I'm not licensed in 40, 50 states, right? I focus on certain areas, certain geographic regions where I have strong relationships, and I want to make Durango, like I want Durango to be like, I want to know everything about it, right? I want when a client calls me to know that the homeowner's insurance is high, right? I'm going to tell them if they don't. There's good loan officers everywhere, and there's bad loan officers everywhere. You don't, that call center environment, 7 states away, licensed in 50 states. I would just try to avoid that. Not only is it going to not help you get your offer accepted, probably from the selling side.
It's a real thing. Yeah, and I think just going back real briefly to the fact that just because they got that 0.25% lower rate from that guy that's 7 states away, they could just, there's a 50-50 chance of it closing. I think you mentioned some stats. You don't have to say the name of the bank, but there's some stats out there of other banks that are pretty rough.
Yeah, I mean, there's again, good and bad everywhere. There certainly are banks and percentages that probably, man, it's been a while, but there was a company I worked for years ago, and their goal was to fund or close like 50-some%, and like, you can't do that. Yeah, you'll never develop a partner, right? 50-some% of whatever they submitted, not every credit pull they did, right? But whatever they submitted to underwriting, people's livelihoods are at stake, right? So we are like, we don't want this loan to not close unless there's an appraisal issue or inspection.
Put $1,000 behind it.
Yeah, 98%, and if it doesn't close, we want it to be. Appraisal came in low, weren't able to find a happy medium, something's wrong with the inspection, seller's not willing to fix it, things like that.
Right. So lastly, talk about credit pulls. There's a lot of misinformation about if you pull their credit to check what their credit looks like to give them a good pre-qual, how does that affect their credit?
So depending on the loan program, right, we're gonna do a soft pull up front, right? If you're gonna inquire in October and buy in March, like there's no need. There are certain products that are going to require a hard pull up front, some government products out there. It can affect your credit, obviously get your credit pulled, especially if you're doing a hard pull. I would say that it's a necessary thing. People say, I don't want my credit pulled. That's why you have credit to buy stuff. Don't have it, let it pull by 10 people to save $29 on a loan that might 50-50 close because of what we just talked about, right? So I don't think credit's bad. You got to pull it. And plus, don't you want to be more sure going in, right?
Absolutely.
We won't actually pull it. We won't actually do the hard credit pull on a lot of loan types until the offer's accepted.
So that's key. That's key for them to know. You're not pulling that until the offer's accepted.
Sure.
So you're still, do you have a way to see their credit before?
Yep. So we do what's called a soft credit. We can see all 3 bureaus if we need to, and essentially it's not going to affect your credit. We can just basically see. It's enough for me to say, hey, yeah, I can get you a loan. It's enough for me to write you, but it's not enough to fund a loan.
That makes sense. And by the way, guys, if you're even thinking about moving to Durango, Southwest Colorado, we both got your back when it comes to moving here. I'm a licensed realtor. My name's John Burden with HomeSmart, and we'd love to help you with all of your real estate needs. Jake Dewe over at Rocket Mortgage. Would love for you to reach out to him, even if you're not thinking about moving out this direction. Thank you guys so much for watching. We'll see you.